Let's talk about fees and costs and taxes. The average mutual fund investor is experiencing costs that are not helping you. How do these costs work? Well, the average mutual fund investor has something called a net expense ratio. You can find that in any prospectus. How many of you read the prospectus of a mutual fund? It wouldn't surprise you to learn that even fewer actually read the supplement of additional information which will capture the rest of these fees. The net expense ratio is regardless of whether or not there's a load or a no load, and it's a little bit lower in the index funds and a little bit higher in the managed funds. In addition to that, there's another expense. This is from the supplement of additional information. This expense is the turnover cost for when a mutual fund, whether it's an index fund or an actively managed fund, engages in simply by buying and selling shares in that period of time. So it's a transaction cost, it's the difference in what a mutual fund might have to spend to buy a stock versus to sell a stock. And because they do it so frequently, it actually generates some taxes, which usually are about 2.5%. But it gets even worse. Not only that, there is a custodial cost, which is something between 0.6 and 0.25%. And you also pay the difference between what it costs to buy the mutual fund versus selling the mutual fund, or an exchange-traded fund, sometimes known as an ETF. That is another cost. Altogether, you're talking about almost 5% headwind before inflation, before advisory fees, just to break even. Let me show you, remember this number, what it looks like when it's done right. When it's done right, you have something that looks like that for the net expense ratio. You have something that looks like that for the, and that's a 0 in front, by the way, for the trading costs. Now, because there's lower trading costs, you have taxes that look like that. And when you're with a high-quality firm, there will be no custodial costs, no trading costs of the fund. Altogether, that's 0.96%. Now, I ask you folks, that's almost a 3% difference. Can you imagine how much impact that 3% will make over the course of your lifetime? The number is astounding. It was Einstein who said the eighth wonder of the world is compound interest. Imagine compounding that 3%. Make great decisions, folks.